All right, hey, what's going on? This is Dan Keller, mortgage advisor at New American Funding. Today is Friday, January 13th. This is my second Making Sense of the Market episode of 2017, and I want to thank you for listening. So, hey, I'm down here on the Everett waterfront in between meetings today. You can't see this, but the Olympic Mountain Range and the Naval Shipyard behind me is just a beautiful backdrop. But I want to go ahead and get started. I want to keep this one as quick as I can, 3 minutes to 3.5 minutes, so let's jump right into this. I want to start with this news right here. Today, we officially have recovered 50% of our losses that we saw hit the market after Donald Trump was elected. Meaning, you've heard me talk about this, but mortgage interest rates literally went up a full percentage point after the election. And today, I'm excited to announce that we've recovered 50% of those losses. Great news. What I want you to pay close attention to is the Dow Jones. So when the Dow is moving nicely and having great closings, that's typically hurting mortgage rates. When the Dow is struggling and having a bad day or closing poorly, that means that's good for interest rates, and rates may improve as a result. There's that inverse or reverse, if you will, relationship between the Dow and rates. So keep an eye on that. Also, keep an eye on and an ear on when Donald Trump talks. Listen, he spoke on Monday. He didn't say anything about the economy or anything positive about it, and the Dow dropped, okay? So when he talks, the markets will move. A lot of weight is being put on Donald Trump improving the economy, so keep a close eye on that. Some really good news right now that I want to talk about. Last week, HUD announced that FHA will be reducing their monthly mortgage insurance requirements from 0.85% to 0.6%, 0.60%. I'm not going to explain it right now, but right here, go to thedankellergroup.com. I just wrote a blog post and an article on what that means. If you're a real estate agent, you need to check this out. You need to know this, and then please share that information. If you're one of my past clients listening to this, share this good news about rates, good news about the housing market. Share this around your office or with your friends and family members. I'd greatly appreciate it. What this means, here's exactly what this means. Last month, Fannie Mae increased the county loan limits to $592,250 in Pierce, King, and Snohomish County. You combine that with this and some other great things happening, and that's a great sign of stability in the housing market, but it's a great sign of projected stability in the housing markets for 2017. So a lot more good news. I want to talk about a couple other great things that are happening right now, news that you can share more relative to real estate professionals. Appraisal turn times are back down to realistic turn times, 5 to 7 days, maybe 10 days, which we knew would happen after the refinance boom. USDA's turn times, the USDA zero down home loan, we're back down to 4 to 5 days, 4 to 6 days, which will allow you to close a USDA home loan in less than 30 days at our bank. So I'm going to talk about rates and the trends, and then we'll wrap up here. Because I'm talking about rates, I need to disclose my MLO number. It's 115349. Government loans, FHA, VA, USDA, 30-year fixed are back down into the threes. Conventional Fannie Mae and Freddie Mac loans, home loans are in the low, 30-year fixed rates are in the low fours. So if you found this information valuable, please share it. I want to be a resource for you and your friends, your family members and coworkers, real estate agents. I want to be your lender. So get this information out. If you have any questions, I'm here to help. My contact information is somewhere around this report, and I look forward to connecting with you next Friday. Okay, take care.